You're watching Business Incorporated live from Channels HQ. Coming up, the Ghana Securities Industry Association rejects debt exchange program offered by Ghanaian government. Egypt's annual urban consumer inflation surges to a 5-year high of 18.7% in November, closely matching analyst expectations. Kenyan banks begin raising charges on their loans after the Central Bank of Kenya raised the base lending rate to tame rising inflation. Hello and welcome to the program. I'm Ladi Williams. First off, let's take a look at how the markets are doing at intraday. Starting with the African continent, we see sentiment is mostly positive with markets we track in Africa. They're just the NGX there. Breaking that streak there, down 0.33% at intraday. And we see the South African index, that's up 0.15%. Other markets we track, the EGX 30 there, that's up over 0.5%, 0.52%. Then Kenya closed 0.71% up. That was yesterday. Let's take a peep now into the NGX equities market with Damilare Ashimiu, Head Investment Research at AfriInvest Research. Join us via Zoom. Great to have you on the program. So what's the sentiment like at this hour? Hello, Damilare, can you hear me?
Okay, yeah, I can hear you now.
Yeah, so what's the sentiment like on the NGX at this hour?
So basically, here's the meeting proceedings on the NGX. As of a few minutes before the commencement of this show, we have more tickers in the red region than more on the positive region. As a matter of fact, there are about 16 tickers currently trading southward now. So volume of transactions is also very low. It shows that investors' confidence are not really significantly. Although for a number of days now, 6-7 days before now, the market has managed to close in the positive region. But what we have seen thus far today is that a lot of tickers, about 16 numbers, right, are trading in the southern region, meaning that market trading more on the bearish note.
What are you expecting for close the market today?
So prior to till now, we've been seeing some sort of late rally towards the tail end of the market, where you see some buy interest on some fundamentally viable stock pushing the market. And we also emphasize that even though the market is currently trading southward at about loss of about 0.33%, we believe that the few time that it's left for the market to trade before it's enough to see buy interest on a major bear weather to push the market back to the positive region, though to be a mild gain, because the market is still short of a sustainable positive trigger to drive accelerated buy interest by investors.
What stocks are you recommending to your clients to buy at this time?
Yeah, so what has always formed our recommendation basis for our clients is to consider tickers that have strong fundamentals, that have the capacity to outperform the broader economy. I mean, we've seen a lot of macroeconomic challenges weighing on companies' performance capacity thus far in 2022. There is energy crisis that is eating deep to cost of production. There is administrative expenses growing up significantly. There are FX challenges, so which means that it will only be wise for investors to look at those companies that have inbuilt mechanism to deliver optimum return in all these challenges, deliver a strong bottom line that will cascade into strong dividend payment to investors. So our recommendation ideology is always hinged on going for tickers that have strong fundamentals, that have proven capacity to outperform the economy, and we have them cut across 5 major sectors trading on NGX, including the Afri-ICT, where we have the likes of MTN and Airtel. So basically, fundamentally viable stocks companies that have proven potential to outweigh the broader economy It's always what we recommend to our clients, and we have them across sectors.
All right, investors looking to outperform the market at this time. Thank you so much. That was Damilare Ashimiu, Head, Investment Research, Afri-Invest Research. Thank you so much.
Thanks for having me.
All right, let's flip over now to the Middle East. Let's see what's happening in those markets there. We see it squarely mixed. Abu Dhabi, Dubai, and the UAE, both in red, close to 0.81 and 0.80%. We've moved over now to Saudi Arabia and Qatar. We see that's green there with Saudi index. They're the biggest mover, up 1.11%. Away from the Middle East now, let's move on to Europe. You see it's one of the largest financial scandals in German history and a major black eye for the country's politicians and regulators. The saga surrounding collapsed payment handler Wirecard now goes to trial today with the former CEO and two other executives facing fraud charges. Let's hear more now from Stephen Beardsley right there in Berlin. So, Stephen, what exactly is at stake in this trial?
Yeah, this is a financial scandal that rocked the German business and political worlds almost 2 years ago and continues to have ramifications. Wirecard was something of a business fairy tale with a spectacular implosion. Now, the company was a payments processor that meant that it certified business transactions between consumers and businesses, essentially. Its business grew and grew until it became one of the most valuable companies in Germany, joining the DAX 40 index. And then in 2020, auditors discovered a roughly 2 billion euro size hole in its accounts. That was almost a quarter of Wirecard's balance sheet. So a massive loss there that could not be explained, and that investigators later said was made through forgeries, that those were forged transactions. Now, the CEO of the company, the former CEO, Markus Braun, is at the center of this trial. He faces charges of fraud and embezzlement, but another executive will play a prominent role even though he's not there, and that's former Chief Operating Officer Jan Marsalek. He's accused by Braun and others of being the mastermind behind what they say was a kind of shadow operation at Wirecard. He won't be there because shortly after the revelations of the balance book problems, he fled, and investigators say that he's actually in Russia, where he cannot be extradited as of this moment.
And why did this scandal have so much resonance in Germany?
Yeah, beyond the spectacular figure of a company that joins the top ranks of German firms and then suddenly faces all these fraud allegations, there was the lack of oversight, frankly, on the German side. These allegations, or I should say, there were allegations swimming around Wirecard for years before 2020. In fact, the British financial newspaper Financial Times had run a series of articles dating years back before everything finally imploded, and yet those weren't picked up on, neither by German media, but also by German financial regulators. And in fact, at one point, financial regulators even turned on the Financial Times, accusing it of trying to depress Wirecard's share price through negative articles, essentially benefiting short sellers. So at a moment when it could have picked up the allegations and conducted its own investigation, basically German regulators protected a German business. There's also the political connections between Wirecard and the establishment. Wirecard was known to have serious lobbying efforts in the Chancellor's office. At the time, that was Angela Merkel. Wirecard wanted to expand in China, and that was a message that Merkel also carried to China, speaking up for the company in her visit there. And then also the finance minister at the time that this all happened was Olaf Scholz. He's currently the Chancellor of Germany. Now, he has denied any sort of wrongdoing or any sort of missteps during several interviews in an investigative committee that was created after the fact. And ultimately, he was elected. So this is something he seems to have put behind him.
All right, Stephen, what are we seeing in European markets today?
Yeah, we're seeing a light uptick by the major indexes in Frankfurt, Paris, and London. Generally, trading is expected to be somewhat muted today, as there's still not a whole lot of fresh economic data coming in today or in the following days. Really, all eyes are on next week for the ECB as they hold their meeting to decide interest rates, and then a Fed meeting later. There's also a bit of a dampened mood in amongst investors right now, unsure about what to expect in the coming days. There had been a bit more of a bullish sentiment given some recent positive economic indicators out of the U.S. and elsewhere, and then of course China dropping many of its COVID regulations. However, also those new Chinese export numbers that came out yesterday showing a stark drop in numbers in November have returned sort of that negative sentiment to markets that are trying to suss out exactly where this global downturn is headed, if it's going to be as bad as many think it's going to be, or if perhaps things are actually a little bit better than had been expected.
All right, global investors on edge right now in those markets. Thank you so much, Stephen Beardsley, giving us the details right there now. Let's move on to the UK. We see it's all about the energy issues there. We have Juliana now to bring us up to speed. Great to have you, Juliana. So a creation of jobs in energy seem to have outweighed climate change concerns as UK gets approval for the first new coal mine. That's the first one in 30 years.
Yeah, you're absolutely right. Good afternoon, Laddie. I suppose we're still going to have to wait to hear more from the Levelling Up Secretary, Michael Gove, who has been speaking in the House of Commons. But as you can imagine, this is quite a controversial discussion. So I do believe the Speaker of the House actually had to disband the discussion. But this is all about, as you said, this new coal mine, which is going to be built in Cumbria. It's being developed by Whitehaven Coal. Now, the developers, Whitehaven Coal, are saying that, it's not as bad as it sounds, that, if you scratch beneath the surface, we are doing our best to make sure that it is a clean and green fossil fuel extractor. But of course, you can imagine there are Conservative MPs and MPs across the House that are completely dismayed by this decision. And they do feel as if Rishi Sunak, the Prime Minister, has completely obliterated the UK's stance as being the world's leading clean, green government. That was one of the huge manifesto pledges of Boris Johnson. Of course, just last year, we were hosting world leaders at COP26 in Glasgow, providing a platform for all of these pledges, which included making sure that coal was to be phased out. But now we've gone against it. And I think a lot of people are starting to poke holes in the reputation of Rishi Sunak, because just a week after he was sworn in as Prime Minister, he said he wasn't going to be going to Sharm el-Sheikh, that he had more important things to do. He's since reversed that once he knew Macron and Biden was going to be there. But now giving the green light to this coal mine is making people suggest that perhaps, being clean and green is not as important to him as is bringing investment. Now, talking about the investment, it is supposedly going to bring about £165 million to the area. Again, if we go back to the 2019 mandate of this Conservative government, it was to level up. Before the pandemic, levelling up was the huge issue, because there are so many people who live outside of the capital city that don't believe they're getting their fair share of the buck and of the investment. So the Conservative Party said they were going to reverse it around. A lot of people say that's been shelved because of the pandemic and Partygate and all of the other issues. And now Rishi Sunak wants to be determined to do that. So yes, it is a significant issue. It is very unlikely to pass the House. If it does pass through the House, it is going to face significant legal challenges. I don't know if you've seen the protests from Just Stop Oil, Laddie, but they are fierce, these people. And let's just say they are not too happy.
Yeah, obviously they aren't. We'll keep tracking that story there. But another cheery one we have now. We see First King Charles III coins to enter circulation from today. How excited are Brits about this?
Well, to be totally honest, not really excited. It definitely marks a new era in coins in the United Kingdom, because of course King Charles III is now the new monarch, the head of the Commonwealth. Got to say, not incredibly popular with everybody on two occasions since he was coronated, or not coronated. The coronation is coming later next year, but since he's took on this new position, he has been been egged, you know. I don't think the eggs have actually hit him, but he is not obviously as popular as the late Her Majesty Queen Elizabeth. Nevertheless, he does get to put his effigy on a coin, and Royal Mint have released these new coins. I believe about, how many of them? 4.9 million 50 pence coins are going to be available from today from about 10,000 post offices. So if you are one of the very few, because again, in the UK, we're kind of a cashless society now, it's very, very difficult to find anyone with a spare coin in their pocket. But if you are somebody that does still use the post office and still use these coins in cash, you could go there today and you will likely get a 50p coin. I think the effigy of King Charles III is going to be to the left. The Queen's was to the right, so there is a slight difference. And of course, on the back of this 50p coin, we are going to see a tribute picture of the late Her Majesty. So she's not going anywhere yet. And for anybody in the UK or anybody in Nigeria who does still have loads of cash of the Queen, don't worry, it is still going to be legal tender. It is probably going to take decades for that to completely come out of society. And of course, it does come on the day when the Netflix documentary of Harry and Meghan is being aired. That's causing a huge stir. And I think Harry and Meghan have unfortunately trumped King Charles today.
Well, I guess we'll look out for that. I'm sure you have that 50p for me tomorrow. I'll be looking out for that. But how are the markets looking?
If that's all you want, I can give that to you. 50p, I think I can just about afford.
I'm that cheap,
the markets are not doing... Yeah, the markets are not doing great, actually. Lots of fears about, you know, the global recession, global supply chain issues. We're having our own domestic issues here. Pretty bleak. Red is the colour of the markets. The all-share is down 0.07%. The FTSE 100 down 2 by 0.18%. And the FTSE 250, the domestic market, that's down by 0.28%. In the currencies market, the British pound is currently trading down on the US dollar. So that rally has stopped, down by 0.39%. Also down 2 on the euro by 0.29%. And I believe the British pound is currently trading flat against the Japanese yen at intraday, Laddie.
All right, I guess red is the caller. Thank you so much, Juliana. So that was Juliana there giving us the details from the UK. Let's head on to the commodities market now. We see the price of natural gas in the global markets declined by 25%. 3.89 MMBTU this year after a sharp increase. That's $3.89 after the onset of the Russia-Ukraine war, when it reached $9.12. The futures contract of natural gas is now at $5.81 for MMBTU. Join us now is Halima Adediran, analyst, financial derivatives company. Great to have you.
Thank you for having me.
So I would have expected the prices would remain, elevated, since the war is still on. Why are we seeing this drawdown in price?
Basically, the determinants of price of any commodity is the interplay between demand and supply. But as expected, the winter period always experience a spike or an increase in the price of natural gas because it is used to heat homes, it is used for industrial purpose. But because of weather disruption, as we can see that the summer is shorter than expected, the autumn is longer than expected, so also the winter is not as cold as expected. And this has caused a decline in the expected demand of natural gas. And aside that, since the advent of Russia-Ukraine war, we've seen that the Russians are trying to weaponize energy, which has made EU to shift to alternative sources of energy and to source for supply of natural gas from other countries like the US. So this is also causing a decline in the demand for natural gas because EU accounts for like 1/5 of importation of natural gas from Russia. So it's another factor that is necessitating the decline in the price of natural gas.
We know that Europe is exploring, a couple of African countries to get liquefied, natural gas. How's Nigeria doing with investments in getting, the LNG to Europe?
recently, the NBS just reports the quarter three numbers, and we see that natural gas consists or accounts for like 12.7 of our total exports. But the problem with this is like other products like petroleum too. There's a cap on natural gas, which is making it disincentivized for investors to go into it and invest in it. Rather than investing in it, they will prefer to flare the gas because it will not be profitable for them at the end of the day. So it's causing a kind of lag for Nigeria. Though we have a large reserve of natural gas, one is even just discovered in the northern parts of Nigeria. But the problem is the exploration and the investment because of the cap on the price of natural gas. So
all right, what can we expect with cooking gas prices here in Nigeria?
Well, cooking gas is a refined product from natural gas. But we should take note that it is being imported to Nigeria. So because of the forex scarcity issue and pressure that we have right now, we are likely to see the price of cooking gas remaining elevated for now.
All right, thank you so much. That was Halima Adediro, analyst, financial derivatives company. Thank you for that update. All right, that was Halima there giving us the details for natural gas markets. Let's move on to other stories now. We'll see banks in Kenya began raising charges on their loans after the Central Bank of Kenya raised the base lending rate to tame rising inflation. One lender, NCBA Bank, has already notified its customers of the high interest rates that will take effect on January the 6th, 2023. The bank has raised the base lending rate for its Kenya shilling denominated loans to 11% from 10% and its dollar denominated loans to 10% from 9%. Lenders are required to seek approval from the CBK to adjust their lending rates, after which they have to issue a 1-month notice to their customers notifying them of the lending rate adjustment. And Egypt's annual urban consumer inflation rate surged to a 5-year high of 18.7% in November, closely matching analyst expectations, according to data from statistics agency CapMass. The inflation figure, up from 16.2% in October, was the highest since December 2017, when it hit 21.9%. Price rises followed the currency devaluation in October and continued restriction on imports. Analysts say the increase reflected continued jump in month-on-month inflation, with prices rising 2.3% compared to 2.6% in October. And the Ghana Securities and Industry Association has rejected the debt exchange program offered by the government. The association, which is made up of security exchange firms as well as investment and capital market operators, argue that the program is not acceptable in its current form. The association, in a statement, argued that a bond is an agreement between two parties, and any chances to the terms must be agreed to by all of them. According to the GSIA, it understands the difficult crossroads where the nation currently finds itself and the difficult choices that need to be made to set the country on the path to debt sustainability, but it will not compromise on its position. And that's it on Business Incorporated. Thanks so much for watching. I'm Ladi Williams. Bye for now.